Hello everyone, my name is Simran Satpathy. I'm studying in BTech third year CSBS from Shastra University, Tanjore. My topic for the assignment is called flexible budget. So before going into flexible budget, let me tell you what a budget is. A budget is a financial document which is used to project future incomes and expenses for a company. Now, with this knowledge of budget, let's go on for what a flexible budget is. Uh, so, basically, flexible budgets are the budgets that can be adjusted depending upon revenue and cost changes throughout the fiscal year. The formula for flexible budget is fixed cost plus the actual unit of activity into the variable cost per unit of activity. One point here that is to be noted that if we are given flexible budget for a certain level of activity, let's say 60%, then we can calculate the flexible budget for uh, another level of activity, let's say 80, 85, or 90 percentage of activity. And one more thing here is that the variable cost is constant for each activity level, and the fixed cost is constant for cost per unit for every level. Next, let's see what are the types of flexible budgets. There are three types of flexible budgets. First one is basic, the second one is intermediate, and the third one is advanced. So now let's have a look on the all the three types in detail. The first one is basic. The basic flexible budget shows a company's expenses directly related to its revenue. An example would be a business whose rent is always the same, that is, it is a fixed cost, but whose inventory costs fluctuate. That is a it has a variable cost, and it is based on the sales. The next is intermediate. In intermediate, the accounts it accounts for expenses that go beyond a company's revenue. This budget includes costs that vary based on that is based on other activity measures. So, an example would be a business's insurance policy that may vary based on the company's number of employees uh, and and the scenario in which the companies may increase the number of new employees in future. The third type of flexible budget is advanced. It considers the variation and ranges of expenses in certain categories of a company's budget. An advanced flexible budget also changes based on the actual cost for each of the category into the consideration. Next, let's see the advantages of flexible budget. The first one is uh, the adjustments are based on profit margin and cost. The flexible budget gives you a realistic idea of your budgets based on changing costs and profit margins. It can help you to make adjustments and compensate for increases in costs, unlike a static budget, which remains the same when you create a budget at the onset of a new year. The second is it has a potential to maximize revenue. These static budgets don't change to reflect an increase in sales, but flexible budgets do so. Uh, Using a flexible budget, a company can better determine where to increase marketing or efforts when it experiences increased revenue. Next is increased cost controls. This type of budget helps you to know when to change certain costs. For example, you may have uh, projected that the sales that are less than uh, expected, and A flexible budget may show updated percentages of each category, enabling you to make adjustments to spending to compensate for the decreased sales. The next one is budget efficiency. You can use this kind of budget even when you don't know the activity, because you can easily figure out the fixed cost, and managers can approve the variable cost. This type of budgeting helps in forecasting and can allow you to determine budgeted sales, cash flow, and expenses at different activity levels. And the last point is it is not rigid. This budget can be recasted on the basis of the activity levels. So hence it is not rigid. Next, after advantages, of course, we have the disadvantages of a flexible budget. The first one is lack of revenue comparison. So a flexible budget regularly adjusts to compare company's actual expenses to the expected expenses. The budget design doesn't compare actual revenue to the expected revenue. So this is one thing which is not favorable by most of the companies. The next is delays. So you may experience delays in issuing financial statements, and you have to wait for the uh, completion of the all the activities to create financial reports that contain a comparison between budgeted and actual information. These delays can also affect the financial planning and other process in the company. The next one is a complicated formula. Since though it may look like the formula is very easy to use, but a flexible budget can be challenging to formulate because some variable costs aren't fully variable and have a fixed element that requires calculation. These kind of variables are called semi-variable cost, which has a fixed part and also a variable part. So, calcul- uh, calculating each category and uh, determining the cost required for each type can take time. And the last one is applicability. A fixed budget may not uh, benefit certain companies. For example, a company which has a majority of fixed overhead costs, such as company in the service industry. For example, a company with little to no COGS and a set overhead cost each month may not benefit from a fixed budget plan. So that's the end of my presentation. I hope that my presentation is useful, and uh, it would be helpful for others to understand on the concept of flexible budget. Thank you.